morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Ivan Jakwe, welcome. Thank you for being the first one to join the Instagram live. It is a pleasure. Quick disclaimer before we do begin: the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading in the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the markets the right way. It is the final trading day on the month of November. Quite interesting, noting there has been a lot of activities that has happened in this particular month, and in the spirit of Black Friday, in the spirit of you, the traders making this possible, we do have the HFM Black Friday bonus promotion, 50% top-up bonus on your account. It's going to be limited to the first 2,025 people. See what we did there? And it's also going to be capped at a maximum of $2,025. Once again, you go over to the HFM under the bonuses and promotion segment, click on the 50% top-up bonus for Black Friday. This bonus is going to end today at exactly midnight. This is your time to capitalize on the 50% top-up bonus. Quite interesting, noting Black Friday being brought to you by none other than HFM. We do have a few other promotions that we have ongoing. The pièce de résistance is going to be the Africa score and draw, whereby we traders have the opportunity to welcome. Just Indeed, the competition is going to run into 2026. You have an opportunity as traders to take home a brand new BMW 4 Series. Not only that, there's going to be a UK Premier League trip for two. You and your better half, all expenses paid for, flights, accommodations, match tickets. You redeem 20 points for a single ticket. 4 people are going to be gifted a 55-inch TV. 20 winners are going to be given official EPL football jerseys of their choice. And 60 traders are going to be credited $200 into their account. We are going to have monthly lucky draws. The next one is going to be in the next 2 days, 14 hours and counting. We are going to give out quite a decent amount of money as a result. We do have seminars that are currently ongoing. Today is going to be the final day in Eldoret at the KVD Auditorium. If you are around Eldoret, please make your way to the KVD Auditorium. We are going to be there. Mr. Samson Mzera is going to be there, one of the best traders in the world as it stands currently at the moment. We do have physical classes also, and you have an opportunity. The next one is going to begin on 1st of December till 5th of December at the Oval Building. This is going to be Westland's 5th floor at the HFM offices. We are going to be in Kitale on the 29th and 30th, which is tomorrow and Sunday at the Aturukan Hotel. If you are in Kitale, book a slot right now. Let's meet there. If you are not available for the physical classes, we do have the webinars. The next one is going to be in the next 3 days, 8 hours and counting, where I shall personally take you through. It's going to be 1st of December at exactly 7 p.m. This is GMT, East African time. I will take you personally through getting started in the forex markets. Now, today is the final trading day of the monthly candle for November. Quite interesting. Mr. Limo, good morning to you too. We do have Sergio. Thank you for the follow. Lemayan, welcome to the stream. Once again, today is the final trading day of the monthly candle. We do anticipate the monthly candle to close midnight today. Quite interesting. And why is this important? We are going to look at it. As you can see in the economic calendar, we don't have a lot of high impact news releases except for the Germany region, where we do anticipate retail sales for the year-on-year release for the month of October, which actually has just come out right now. If I can switch my calendar to GMT +3, this is very important. Whenever you are looking at economic news releases, always ensure that it is in your local time zone. Now, less than 9 minutes ago, we had retail sales coming. Sorry about that. Beautiful. Now, looking at the information, today's 28th, once again, we had retail sales coming in for the Germany region. The previous number was 0.2. We were anticipating a forecast of 0.2. The number has actually come out better than anticipated at 0.9, meaning retailers are producing more in the Germany region, which is usually good. Whenever the retail sales comes out greater than anticipated, it means like it shows the performance of the retail sector in the short term. The percentage change reflects the rate of changes such as sales. It means that they are selling currently at the moment as it stands. Now, the changes are widely followed as an indicator of consumer spending, because if more goods are being produced at a retail level, it means that consumers have to buy these goods, which is always a good indicator that money is in circulation, and as a result, a positive economic growth anticipates. It is bullish for the euro, while a low reading is usually seen as negative for the euro. We don't have any news release up until 11, so this is going to be noon. We are going to have the GDP numbers come out for the Swiss franc. This is the quarter-on-quarter release for the third quarter. We are looking at a previous number of 0.1%. The forecast is at negative 0.4%. The number has not yet been released. We will want to look at what the Swiss economy currently at the moment is up to. We are going to conclude with more news releases for Germany. This is going to be the CPI numbers year-on-year release for the month of November. We are looking at a previous number of 2.3%. The forecast is at 2.4%. If the data comes out greater than 2.4%, it means that consumers are spending in the Germany region, which is usually seen as a good indicator of more euros in circulation, which reflects to bullish momentum as a result. Now, today I want us to focus more on the charts. Considering we don't have a lot of news releases, I want you to engage with me. Which asset do you want us to look into? We do have the Fed Watch tool here, whereby the probabilities has actually moved up quite significantly. If you look at where the month did begin, we had a 90.5% chance that interest rates will be taken down to 350 to 375 basis points. As the month progressed, we did so, especially after the US government did reopen, we did see quite a lot of activities. Recently, we had members for the Fed Reserve. There is a split currently at the moment, but we are looking at a high probability the Fed Reserve is going to lower interest rates in the next 12 days and counting. 12 days, 11 hours and counting. There's an 84.7% chance the Fed Reserve will lower interest rates, which means we are looking at more selling pressure in terms of the dollar. There are so many opportunities for us as traders currently at the moment. That's why we do have the Shield 500 account for you, the traders. You have an opportunity too.
Mimi ni kijana wa Kimasai. Kama vile Mmasai anapotumia ngao kama ulinzi kwenye jamii yake, ndivyo hivyo HFM tunakuletea Shield 500. Hii inafanya vipi kazi? Wewe kama mteja mpya wa HFM unapofungua account leo na kuchagua Shield 500 kama account yako, mtaji wako wa kwanza usiozidi dola 500 utakaoweka kwenye account ile insured endapo utapata hasara yoyote ndani ya siku 25 za kwanza za kutrade. HFM itarejesha ile hasara uliyoipata ili uzidi kutrade. Ofa hii inapatikana ndani ya siku 10 tu baada ya kufungua account. Fungua account leo, anza leo, mtaji wako umelindwa. HFM Shield 500. See you in the trading room.
Beautiful. Only provided for you by HFM. You have an opportunity to deposit between $10 and $500. Whatever losses you do incur within the first 25 days, we are going to give you back in terms of tradable funds. Switching gears to the charts. Quite interesting. I will want to start on the daily perspective. Looking at, let me reduce the noise that I have here on the trading history. Look at how the monthly candle did open on gold. It did open around $3,988 an ounce. Currently, from the opening price to where we are, prices of gold has moved up almost 5% to the upper side. This is almost 2,000 pips in less than 19 trading days. The monthly candle once again is about to close today. Tomorrow is going to be a Saturday. The markets will be closed also on Sunday. Then come Monday, 1st December, we are going to start a new monthly candle. Looking at the price action at the moment as it stands, we did have massive selling back in October, but prices retraced more than 50%. We had signs of sellers also coming into the market. This was when Federal Chair Jerome Powell did hint that there could be a possibility they might hold on to rates. But as the month did progress, we did see the probabilities of an interest rate cut coming back on the table. And if I can identify a trend line, we do have a first touch, second touch, third touch. This is the most recent fourth touch, and we are seeing buyers still in control over these markets. Looking at it currently at the moment, we do have a region of resistance that is around 4,195. I would want to pay attention. If at all we do break to the upper side, I would consider looking at more net long opportunities on gold against the dollar, up until the Fed Reserve do decide to cut interest rates, which is going to be in the next 12 days once again. Silver is not left behind. So today we are going to do analysis on the daily perspective. We have been seeing prices of silver move quite aggressively to the upper side. Last month or mid this month, we did see signs of selling pressure. There were talks of a short squeeze on silver, where the spot prices of silver was trading well above the futures, which is considered a supply and demand disruption. Whenever the futures prices are trading well above the spot prices, it means there is a demand, there's more demand for the silver metal compared to the supply. Whenever this happens, it means that whoever is trying to cover their short positions right now will be forced to close at a higher price, hence driving prices further to the upper side. For the past 4 days, 5 days, we have been seeing silver prices move quite aggressively to the upper side. We are in a critical region at a resistance around the 55, almost $55 an ounce on silver. If we do close well above $55 an ounce, I would consider looking at more net long opportunities on the silver metal, considering, once again, if the Fed they do decide to cut interest rates in the next 12 days, it does mean that I'm anticipating a weaker dollar. Now I'm looking at XAG-USD, meaning if the dollar is weaker, silver prices will continue moving further to the upper side. Looking at how the monthly candle did open, now I do have session breaks. These are what you call session breaks on my chart. I can't look at the daily time frame, but I can picture higher time frames in mind, where if I right click on my chart and then I go to properties, I do have the opportunity to click on the period separators. This is the icon here. As you can see, I have checked it already. This signifies that from one line to the next line is going to be 1 month. If you look at it, most of the times it's going to be around 20. Now, looking at last month was 22 trading days. The month of October, we had 22 trading days. For the month of November, starting on this candlestick to where we are, we have had 19 trading days. The monthly candle is about to close today, once again at midnight, and then we move over to the next monthly candle. It's going to be the final trading month of the year. We do anticipate a lot of news releases, considering we do have NFP on the first Friday of December. Then on the second week of December, we are going to have 2 NFPs. We are going to have the NFP for October, and we are going to have the NFP for November. Quite interesting. Looking at 2 NFPs in 2 weeks. Actually, it's going to be more of 3 NFPs in 2 weeks. Quite interesting, noting how that is going to play out in the near future. I would anticipate looking at more long opportunities on the silver metal. Looking at gold against the euro, we were looking at a lot of news releases and a lot of speeches from the ECB, the European Central Bank, especially Christine Lagarde's speech. She has been mentioning about she would love to have cohesion in the European region. They pull together resources and help develop the economy. Now, when you look at Europe, they are more of producing. They do produce a lot of goods and services. When you look at Germany, for example, they do produce really good German machines. When you look at France also, they do produce really good textiles. And these companies and countries depend on the global economy. If the economy is not headed in the right direction in countries like the United States of America, we also do anticipate it's going to impact prices of the euro. Once again, it's all about buying and selling. If you are producing the goods, that's step number 1. These goods have to be sold somewhere. Now, if the global economy once again is not doing good, it means these countries are going to be affected. We will look at USD/JPY. I do anticipate a lot of activity on the dollar against the yen in the near future. But if I can pull a Fibonacci from this most recent high to this most recent, swing low. Currently, at the moment, as it stands, prices are trading well above the 61.8, meaning buyers are still in control over this market. If I can identify this is a higher high, this is a higher low. Looking at price action at the moment as it stands, if prices do close to where the midpoint on the highs that was formed, this was back in the mid of this month. To be specific, this was 13th of this month. I would consider looking at more buying opportunities if gold prices does move to the upper side. The euro is also anticipated to weaken in the near future. I would want to look at currencies next, looking at starting with GBP USD. Now, the day before yesterday, we had the Chancellor, Reeves, reading the budget for the British pound, and they are going to tax the British region much more, especially the high income earners. They are going to be taxed more. There is a budget deficit gap of more than 20 billion pounds, and the government has to make up this money from somewhere. Now it has to come from the citizens. We are looking at more taxes being brought up. Just to pinpoint some of them, we are going to see new taxes on electric vehicles, whereby they're going to be taxed almost I do believe it's 8 cents per mile for taxi users who are using electric vehicles. We are going to see the minimum wage being increased slightly by £0.50 in people in the United Kingdom. They are going to abolish the Two-Child Act that has been there for quite some time. They are going to do away with that. The reason why they are doing this, they want to stimulate the economy. They want the money. They are seeing a budget having a deficit is going to come through taxes, and as a result we have been seeing prices of the British pound gain more. As a result, looking at ever since the laws that was created, the budget was read around this particular region here. This was around 2-3 p.m. back in Wednesday, and ever since the laws that was made to where prices are, GBP USD has moved up almost 0.7%. This is more or less 90 pips to the upper side in less than 43 hours of trading. I would consider looking at this as a breakout and a retest on this region. We did have a region of resistance forming before the budget was released. The market did break out to the upper side with a significant candle, came back retested yesterday during the lows that was made during London session. Currently at the moment, we are seeing Asian session did consolidate, but London is about to open in the next 28 minutes. We are seeing prices move further to the downside, 38 minutes to be looking at it. If we do get signs of buyers coming into the markets, I would consider looking at more net long opportunities on GBP USD, potentially for prices moving further to the upper side, taking out the highs that was formed yesterday at 1.32690. Looking at Euro USD, it's Blanco. Welcome to the stream. Euro USD, we are looking at a euro region being weaker, the dollar also being weaker. Now, if you pair two assets that are weak at the same time, most of the time you're going to see consolidation, and this is what you're seeing on Euro USD currently at the moment as it stands, whereby prices are neither making clear higher highs or clear lower lows. As a result of both economies are shaky at the moment. Now, for us traders, you would want to participate in volatility. You would want to pick an asset that is strong and an asset that is weak, so that the asset that is stronger is going to move quite significant compared to the asset that's weaker. Let's take, for example, gold is a good asset looking at it compared to Euro USD as it stands at the moment. Now, USD JPY is the next asset that I want to pay keen attention to, and this is something that we have talked about on the stream ever since the week did begin. We are looking last week on Friday, almost 7 days ago, we did receive confirmation from Bank of Japan. They are going to release the biggest stimulus program that Japan has ever seen. This is more than $135 billion, almost 42 trillion yen that they are going to put into the economy. What this means is that Bank of Japan is seeing the economy slow down. Last month, Prime Minister Takaichi, she's the first female Prime Minister of Japan, was elected, and she has a few things in store for us. Now, the stimulus program is going to be number one. Just to put a few facts into it, let's say, for example, children below the age of 10 years are going to be credited $135 per year. That's quite an interesting amount of money. That's almost 18,000, 19,000 Kenyan shillings being given to help stimulate the economy. We are going to see prices of rice in the Japanese economy also going down as a result of the stimulus program. Now, when Bank of Japan usually intervenes, the markets usually move. The last time Bank of Japan did intervene was a while back. Considering it was around May, June, when prices of USD JPY was heading towards the 162 mark region. It was around this particular region here. It was 161.8. Now, prices of USD JPY never reached 162. And when Bank of Japan saw this happen, they did intervene. They bought more than 5.5 trillion worth of bonds in less than 5 days. And prices of USD JPY melted. For the next 40 something days to be exact, for the next 47 days, trading days to be exact, prices of USD JPY moved more than 13.64% to the downside. Now we are looking at a potential scenario that Bank of Japan is also going to intervene in the near future. Looking at price action, USD JPY was moving to the upper side, making clear higher highs, higher lows, higher highs, higher lows, higher highs. If I can go down to the 1 hour time frame and identify what has been happening recently, we did have a change of character whereby prices did break the most recent region of support, which was around here. This was the most recent region of support. Prices moved to the upper side, but we started seeing signs of sellers coming into the markets. We had a candlestick that broke to the downside, broke the most recent higher low, and the region that once acted as support came back and was retested as a resistance, and then prices started making new lower lows, lower highs. I did identify a Fibonacci level from this swing high to this swing low. Prices retested on this 50 and the 61.8 region. Currently, at the moment, we are retesting on that zone once again. This signifies that buyers are struggling to break prices to the upper side. If I look at US dollar, I do anticipate the Fed Reserve to cut interest rates in the next 12 days, which is going to weaken the United States dollar. Now, come December on 19th, we are going to have Bank of Japan increase their interest rates, possibly, which means it will strengthen the Japanese yen. There's a high probability that USD JPY will continue moving further to the downside as a result of the news that we are anticipating currently at the moment as it stands. I would want to switch over now to the Swiss franc. We do anticipate news releases for the CHF. I would want to look at USD CHF. Now, Swiss franc is a very interesting country whereby their banking system is really good. It does favor a lot of high net worth individuals. It's considered a safe haven whenever there's uncertainties in the markets. If I can go to a daily perspective, just to highlight where the year did begin, the year began somewhere around here. When Trump took over office earlier this year, he did mention about tariffs. Now, tariffs were seen as negative. Why? Because the costs were going to be passed on to the consumer. As a result of that, the markets digested the information negatively, and USD CHF started moving quite aggressively to the downside. Now, USD CHF is inversely correlated to gold. If you look at gold from January, if I can just point it out, from January around this region, the moment USD CHF started moving to the downside is the moment when gold started moving to the upper side was the exact same moment that USD CHF started moving to the downside. As a result of investors offloading their positions in the dollar, parking their money in the Swiss franc. And as a result, we saw prices of USD CHF move almost 12.6% to the downside in less than 54 trading days. The market entered a bit of consolidation. We were consolidating for quite some time. Currently, at the moment, as it stands, we are also consolidating. For the past 108 days, we are seeing the markets consolidate, neither making clear higher highs, neither making clear lower lows. But if the news that we are anticipating in the next 12 days, and all roads right now point to the Fed Reserve, come December, in the next 12 days, what is Jerome Powell going to do? We are seeing a change of character where prices are now breaking the most recent regions of support around this particular region. Now the support has been broken. Prices is now retesting it as a resistance. There's a high possibility prices will continue moving further to the downside. If at all we do break the lows that was formed at 0.80423, I would consider looking at shorting opportunities potentially for prices coming back down to these regions around 0.78795, which is a decent amount of range looking at it. Now, approach this is only for educational purposes. This should be approached with caution. Why? Because today is the final trading day of the monthly candle. There's a high likelihood come Monday, the markets will open, move to the upper side, form a high, then a body to the low side. I would consider being very careful looking at the closing price of today's monthly candle. Now, looking at the S&P 500, the S&P 500 has been rallying to the upper side, firing on all cylinders ever since the lows that was formed to this high. In less than 90 hours of trading, the S&P 500 has gained almost 5% of its total value. Looking at it, once again, why is this happening? When the Fed Reserve do lower interest rates, these companies are going to service their debts at a cheaper price, which means if they do have loans, they are going to service the loans at a much cheaper price. Hence, more profits for them. That's what we are seeing on S&P 500 move to the upper side. Not only the S&P 500, when you look at the NASDAQ also, similar price action. I would consider looking at more net long opportunities on the NASDAQ. The Dow Jones Industrial Average is not left behind where it has been rallying to the upper side also. I would consider looking at more net long opportunities on these equities. Seasonality speaking, hello the chef. Seasonality speaking, equities tend to do better in December. Seasonality, looking at historical price data, these company stocks tend to do better towards December. It's the final rush before the festivities, and we usually see the markets move quite aggressively in terms of stocks. Not only in the United States, when you look at also the UK 100, the UK 100 has been gaining of late ever since the lows that was formed. This was pre-NVIDIA earnings to where we are at the moment. Prices has moved almost 3% to the upper side on the FTSE, which is the top 100 tech, companies, not tech companies, but companies in the United Kingdom. Looking at Nikkei 225 also, Nikkei 225 is not left behind. We are seeing signs of buyers coming into the markets. If the stimulus program is going to be rolled out sooner rather than later, it means that these companies are going to have much more in terms of profits with the stimulus, with the plans that the government does have, especially Bank of Japan, in relation to the companies in the Nikkei 225. I would anticipate it moving further to the upper side. Looking at US oil, winter is just near the corner. Actually, in the next few weeks, winter is going to begin, and oil prices usually see an uptick where the demand usually increases when more people require energies to warm up their houses, to heat up their homes. Oil prices, seasonality speaking, do tend to go up around the December region. Now, not only on US oil, also when you look at UK oil, we have been rallying. Yesterday, the day before yesterday, prices tried to break to the downside, but closed well above that range, signifying that sellers indeed try to push oil prices down, but buyers came in and drove the prices back up, trading at the $58 a barrel region. Currently, at the moment, as it stands, oil is trading at $59.10 a barrel. I would consider looking at more net long opportunities, potentially for prices coming back into the 60 region, which for the greater part of this year, we have been seeing oil prices around the $60 a barrel, except for the time where earlier this year, we did see tensions in the Middle East, which did disrupt oil prices a bit. Now, looking at January, there are more sanctions on Russia as a result of their energy supplies. Before Russia invaded Ukraine, Russia was supplying more than 40% of energy into Europe. When they did strike Russia, sanctions were set against Russia, hindering them from exporting oil and energy into Europe. The statistic went down to 20%. Right now, at the moment, as it stands, there are more sanctions that are going to come when Russia tries to export. Now, when they were sanctioned, Russia started exporting oil to China and India, and they were not using the dollar as the reserve currency. They were converting it using their local currency. Now, come late January, more sanctions will be imposed against Russia, where we are going to see energy prices going into Europe go well below the 10% region. So what they were initially supplying was more than 40%, but come January, it's going to be less than 10%. We have been seeing drone attacks of late, the past 2-3 months, whereby Ukraine has been targeting oil refineries in Russia. We did see the third largest oil refinery in Russia being bombed by Ukraine recently. And as a result of these tensions, this could impact the supply and demand of oil prices. Hence, I would consider looking at net long opportunities on the energy prices. That's going to be it for me for the morning market call. It has been quite an interesting November. December is going to be much even better. There is a lot of volatility we are anticipating, which is the perfect time for you, the traders, to capitalize on the 50% top-up bonus. This is going to be the Black Friday bonus that we are going to give to you. It's going to be available only to the first 25 people. It's going to be capped at $2,025. The promotion is going to end midnight today, which is the perfect time for you to deposit, capitalize on the opportunities come December. That's going to be it for me. Take care of yourselves. Stay safe. The chef, thank you for that.